Today I'll be calling cable. My name is Wakar Meyer and I'm your Elliott Wave analyst, reviewing what has been and predicting what is likely to be in cable price action. Okay, so I haven't been broadcasting for a while. I moved and then had to attend an out-of-state wedding. But since then, something important has happened. So I was calling this point right here the end of a multi-year triangle. I was labeling that E, which ended the triangle, and then the larger degree was going to be B. Okay, I was calling this move down 1, this was going to be 2, and this move down right here was, well, I got the wrong labeling there, 1 second. It was going to be a smaller degree 1. And I said that a strong indicator that that was the proper count would be that it would break both of these trend lines. Well, clearly that didn't happen, and it took out this terminus right here of what I was calling E, this spot right here. So that means that count is not valid, and that has bigger implications for the pound. Okay, so this is a 360-minute chart. And now I'm going to jump to a weekly chart. Let me go ahead and get rid of these trend lines. Go to the weekly. And yeah, let me try and do this. Get rid of those lines. Okay. So what I had previously said was in a earlier video that this right here in, I guess that's 2007, ended in A wave. And that A wave was a zigzag. It was a 535. I think it was actually a double zigzag, but it doesn't matter. For technical purposes, it's the same. And I called this move down into 2009 3 waves, which I still believe it is, and that would have been A. I thought this was working in A, B, C, D, and E, and that it would go short, but clearly that has not happened. So what I think has happened is this is a smaller degree A. We're going to say, we'll call it dot A. This is an even smaller degree A. And this is going to be B. I think this will be C. This will be, or wait a second. Well, hold on a second. That may not be quite right. Just give me a moment here. And E. Okay. Alright, so actually my labeling is not quite right. But what this is going to be is, okay, this is an A wave into 2007, this is an A wave, this is an A wave, and this is an A wave. So my labeling will be a little messed up here. And let's do this. A, B, C, D, and E. So let me get all these things in the right places. Get rid of that. Alright, so this is what I think is happening. So we had 3 waves down, okay? And when A is 3 waves, B is either going to be a flat or a triangle. So that means that this needed to develop into a triangle and then go short, or it's going to retrace 90% of this move right here. So it would have to come up to approximately 2.04, okay? So I think that's exactly what's going to happen. I think that this is an A wave, A wave. It's making a triangle. It's just a bullish triangle as opposed to a bearish triangle. And it's going to do something like that. I think it's still making the D wave. Then there'll be an E wave to come that will finish B, right? So you'll have A in the long direction, you'll have a B wave triangle, and then you're going to get a C wave in the long direction up to that point that I discussed at approximately 2.04. Okay, now what's going to be a strong indicator that that's the correct count is when this point here, the point that I'm calling B of the triangle, let me get my clicker on there, whose high is at 1.6746. When that point gets breached, right, when this is A, B, C, D, E, you're going to have an up, a down, and then when that point gets breached in the long direction, I think that's going to be strong confirmation that that is the right count, and then it'll trade up to at least 2.04 like I have there on the chart. And I think it's going to be a pretty fast and furious move. I think it's going to be similar to this drop through 2008 and 2000, early part of 2009. And I think that's going to make trading in the long direction easy. Now, of course, if that's the right count, then the low here, what I'm calling C at 1.4812, if you're going to trade in the long direction, that's your out. And going back to this is a weekly chart, by the way, going back to the daily chart, or at least a 18-hour chart, I want to show you what I think it's doing in the long direction. And so I was calling this one, well, that's not one, now it's C. But hopefully you can see what it's doing here, is it looks to me, and this is why it fooled me, is it's making a contracting diagonal. You've got 1, 2, 3, 4, and 5, and you can see that's clearly contracting. You can see it's, it's wedging up like so. All right, put that up there. It's got a little bit of a wedge thing going on right there. So as long as the fifth wave is shorter than the third wave, I'm going to expect a retracement into this zone right here. Okay, between 154.33 and 150.96, because when 1 is the extended wave, you would expect the retracement to come very near the terminus of the second wave. And as you can see, that's going to be probably close to or just past a 61 Fibonacci retracement, 61.8%. So I think that's what you need to do now, is trade it in the long direction. I mean, this is clearly 5, and I think this was clearly 5. I didn't miscount it, I simply mislabeled it. So that's today's call. I hope you'll join me again for tomorrow's call.